I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandoilguy.com. Welcome back to the show and Merry Christmas.
Hey, thanks, Jim. Merry Christmas to you as well.
The equity markets still seem to be doing tremendously well. Are they going to continue this upward trend after Christmas?
Yeah, they've been on fire. This December is kind of the season that equities like to run up in price. It's usually a very strong time of the year, and it has been. And, we're getting close to the holiday season being over here. We're only a week or so away. And we're starting to see price pick up speed. We're seeing volatility in price, meaning some larger intraday swings. We're seeing price gap higher in each day. So we've got these price gaps on the chart. And if you don't know what a price gap is, a price gap means stock market closed at $100 yesterday, and then today it opened at $104. And it creates that gap where price didn't trade. And the index, like the SP 500, when it creates a gap, almost 100% of the time, gaps get filled. The question is, does it get filled that day or over the next couple of weeks? And we've created 3 of these gaps in the last 2 weeks. So price needs to come down and will eventually come down and fill those. But we've got this holiday kind of bulge, this kind of run up in price taking place. And we just need to let this upward momentum start to stall out. And we're getting more signs that it's close to happening.
What should you do when you see a market in that kind of condition?
Well, this is the type of market that really all I would do would be looking for very short-term plays that only last a day or a couple of days, and they're small positions. They're just to trade because the markets are going to get stepped on pretty hard. We're going to see a big downdraft any day. Once this kind of rally here, it'll have an unwinding type of day where it sells off. And it just has to be a very short-term play you're looking here. It's just a holiday kind of bulge. You can buy the dips. You can anything that falls down to a support zone, you can be looking to get into those levels. But very short-term type of plays, and I don't really commit any serious capital to positions at this time of year. Not right now for new positions, that is.
Right, buy the dips has been, I guess, the way you've bought the market over the last 9 years.
It has been, and we've had some downtrends, and we've had some pretty good corrections along the way, which at those points when they do kind of present themselves, you can't do that. But yeah, in general, we are at that buy the dip, and it's very, very clear right now that the market sentiment is extremely bullish. It's like a feeding frenzy. You get one sell-off during the day, and by the end of the day, in most cases, the market has rallied right back to the same price or higher. If not, the next day it rallies and blasts past any selling pressure, and we can see that in the VIX. The VIX is at more or less all-time lows, same we saw in 2007, months before the market topped. The last 2 trading sessions, we've seen the NYSE volume hit a ratio of 7-to-1, meaning there's 7 shares on the New York Stock Exchange being bought to every 1 being sold. And that means everyone is piling into stocks and just buying them. And that's why we're getting these gaps in the market. It's just the market is running up faster and faster. People are being greedy. They're just saying, buy me at market when the next day when it opens, and that's what creates these gaps. So we're in a feeding frenzy just like we are in Bitcoin. And people are just buying up stocks, and this will come to an end as soon as the holiday season's over. The cycle analysis is pointing to, the first more or less week and a half of January, we should see a fairly decent pullback, or at least a consolidation where the market fizzles out and trades sideways for a while to regroup.
And, of course, everybody's wondering, what kind of a correction will we see? Will it be a big drop like we had 2 Januaries ago where We had, I think, a Black Friday, the 25th event, where it was just a massive drop? Or are we going to see a gradual step down and then a pickup?
I'm leaning towards it's going to be kind of a violent drop. Every time we've seen a down day, they seem to be very big. They seem to be on a percentage basis. We're looking at 1.5%, 2.5%, depending on the index. We see pretty big drops, and it's on usually very heavy volume. And the way that price action has been on the SP 500 index is the volatility in price and the pattern it's showing is actually kind of warning that when we do have selling, it's going to be 1 or 2 or 3 big down days back to back, just kind of firing and unleashing all this kind of greed buying, and it's going to catch a lot of people off guard. So very aware of this price pattern that's forming, and it's going to be pretty violent, I think, to the downside. It might only be a few percent, could be 2, 3, 4%, but it's going to probably happen quickly.
Yes, and of course, a lot of people were saying, a 10 or 15% correction would be good for the market.
Oh, for sure. The market needs it. In order to really keep going, it needs a correction of that size just to kind of regroup and kind of set itself straight again, rebalance. Right now, it's in a mode where everyone is buying the dips. No one has been selling anything, really. They just keep buying and buying and buying and buying. And we need one of those long drops that shakes out all those people who have been chasing prices higher. They all end up paying a premium, and then we have this half-decent correction that they all panic and they get out. Those are the emotional traders that create these strong rallies at right near the top and the strong initial pullback. They buy high and then they panic and they sell out lower than they just bought. And that's what we need. We've got to get those out of the market. That's what rebalances it, and it puts those shares of all those stocks from those emotional traders into investors or traders who say, okay, I'm comfortable with holding it at these lower prices. This is a great buy, and they're going to hold the shares, and that's what stops the market from falling and allows it to continue to go higher. So those emotional traders are going to get caught on the wrong side here sooner than later.
We'll have more with Chris Vermeulen right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're chatting with Chris Vermeulen. Chris, what are you expecting for energy prices?
I've got an upward bias in energy. Crude oil's obviously had a very nice run. I think the market has got its kind of eyes out for a run up to the 2015 highs, which is the $62 per barrel mark. And today we're trading at $57.50. It's got a nice bullish formation still at this point, and I think we could see it chop around still for another week or so, but overall, I think we're going to see crude oil have a really strong final push up to that $62 per barrel mark, at which point, over the next week and a half or so, I think that could be a very significant top in crude oil. Cycle analysis shows it more or less topping out the second week or so in January up at that price level. And then we've got a very strong move to the downside based on cycle analysis. That's a very significant resistance level on the price chart alone on a technical standpoint. And it's also a measured move if you were to take previous patterns and extend them to where the market should go with the current momentum. So when that level is hit, there's going to be, I think, a lot of traders and investors selling their positions, people getting short, which will drive the market down even more. and we could see a very sharp knee-jerk reaction down from that $62 per barrel mark. So I'm really keeping my eye peeled for a tag of that level, because I think it's going to be a great opportunity to short oil, short the energy stocks, or buy an inverse ETF on the energy stocks type of play.
Well, are the Saudis shorting oil? Because they did for the longest time, and it would be very weird for a major oil producer to do that. So are they shorting again?
I'm not sure if they're shorting again, to be honest. I haven't followed that, so can't help you there.
Do you think they'll still hold to their production freeze?
Yeah, I'm not sure what they're going to do. I don't follow them at all. I don't pay any attention to what they're doing or even what they're saying. To me, it's all news, and it's all just manipulation and in the media and stuff. So I don't put any weighting into that, really.
So what do you look at?
I strictly look at technical analysis, the price action, the volume. The volume is how much support is behind something, how many people are following it. And I just simply use different types of analysis to predict where price should go next, where the next high probability move is. And because price usually leads news. And when the news comes out, price pulls back. That's the reason why you see a stock rally up into the news. You get great earnings, and then the stock the next day drops 5, 6, 7%, and everybody's going, what the heck? Why did the stock crash? They just had killer earnings. Well, that's because the market moves beforehand, and you can see this. That's why you have to follow price. Price leads news, and that's why following anything in the news, to me, is more or less just irrelevant, and it's late, and it'll get you on the wrong side of the market. So I completely discard news and what anyone in politics is saying, almost, because it's all BS.
We'll have more with Chris Vermeulen right after the break.
Cyprus Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cyprus's 100% controlled properties is now underway. Cyprus Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cyprusdevelopmentcorp.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Chris Vermeulen. Chris, natural gas has been very low for a long time. Is there going to be any pickup as we get into colder winter weather?
Yeah, usually we should see a little bump and rally through the cold season here, and the charts bode actually really well for that. If you go way back to 2016 on the chart of natural gas, we've reached this level that was more or less tagged in the last this week, and last week here we've seen it tag this 250 level mark, and every time it's touched this, we've seen a very strong rally from it. It's a pretty significant support zone. And cycle analysis is also saying that we should have an upward bias starting more or less next week sometime. Cycle analysis should bottom out, and we should see a multi-week rally in natural gas, which bodes well with the cold season. And so a lot of things are coming together for natural gas, and it's showing signs in the last 3 days actually, that it looks like a bottom is being put in place. It may already be in. I think it's got another week or so of some choppiness here. It's going to try to bottom out. Usually we see volatility, big up days, big down days. It builds a little bit of a launch pad, and then I think we could see it start to rally here in the first week of January and see some pretty decent gains in natural gas.
Is gold and silver going to do better in the near term and into the new year?
I really do like gold and silver. Every month that passes, to me, it's getting closer to starting its new bull market. The long-term pattern as an investor looks fantastic, but it's still not, it's not in a bull market yet. It's still, even on a shorter-term basis, it's in a big downtrend. From September, we've been making lower highs and lower lows for gold, silver, and mining stocks, and that is a downtrend. In the long-term picture, the prices are holding up very well, but they're still pointing to, there's a lot of work that needs to be done for them to actually be back into an uptrend and to get excited about the next potential rally that could kickstart the bull market. And we're still months away from that. We do have an upward cycle right now in gold, silver, and miners, meaning we should see price try to move higher over the next week and a half. And I think it could struggle a little bit because we are at resistance levels for gold, silver, and miners. They've all already had a bounce the last 4 or 5 days. They've moved into resistance, some previous pivot areas and moving averages, and they're stalling out a little bit there. But I think they're going to continue to try and push higher for another week or so, and we could see them kind of top out next week and try to stabilize. It's not a very clean chart at this point. We're kind of just letting the long-term picture work itself out.
How's the Russell 2000 doing?
Yeah, the Russell 2000 is showing some pretty increased volatility. I think we might have touched on this before, but overall, we've seen it. Back in November, we had a really strong rally, and then we saw some distribution selling, meaning the market was gapping higher and then heavy volume selling, and we saw that happen for about 2 weeks. It just every time the Russell 2000, every time the market opened, it would pretty much gap a little bit higher and then sell down. And in the last 2 trading sessions, we've seen the Russell 2000 pop back up near those highs. Today, it gapped higher, and it's selling down again. So it is struggling here. And I've got more or less all the major indexes here kind of topping out right after Christmas, and we should see more of a consolidation and downward bias in the market. But right now, the market is chopping around. It's in the late stages of a little upward cycle here. So they're going to continue to push and grind higher, but it's going to happen really scattered where prices opening higher, selling off, or gapping lower and rallying. It's messy type of price action right now. It's very tradable for day traders, but as a short-term swing trader, these price gaps add a lot of risk because you don't know how they're going to kind of gap the next day, and you have these big kind of random swings.
Now, of course, the Bitcoin mania that's going on, have you ever seen anything like this?
You know, I've never really fully experienced quite the mania that's going on with this. Obviously, during big bull markets, everyone gets into stocks. It kind of, it seems kind of like the norm because that's what's happened through previous bull markets. But the Bitcoin is just insane. It is, in the media everywhere. Everyone is buying it. I've got friends that just email say, I don't really know anything about it, but I want to buy some. How do I buy some? And I think the fact that most people don't really know how it works or what it is, and the fact that they can open a e-wallet online in 30 seconds and buy Bitcoin with a Visa or credit card just makes it's such a deadly investment. I think so many people are going to lose so much money. People are piling in that have no idea what they're doing. And, Bitcoin could rally huge. It could continue to do this. It could just be, ludicrous a year from now. But I mean, this is a perfect recipe to make, a huge disaster for investors or traders of it and people who buy it. And it's very scary the way it moves.
Of course, the old human greed bug kicks in and people don't want to miss out on what they think is a terrifically good thing. Yeah,
I'm not against digital currencies at all. I think they're awesome. But touching something like this where it's swinging 20 to 28% almost every day for the last month and a half it's pretty crazy. You definitely need to trade very small amounts of money, and you've got to be able to stomach some moves. If it can move that much in a day to the upside, it can move 30, 40, 60% to the downside very quickly. So, because prices always fall quicker than they go up.
Is that something, as you said, the people getting into it don't know really what they're doing now? They're not aware that you could just lose your shirt, your house, your car in an instant?
Yeah, and you know what one of the things is too is that you buy the Bitcoins, you get them in your wallet, and a lot of people don't know or they haven't set up a way to sell them. So sure, they might be sitting there with tons of money, but when it starts to roll over, it could actually take them a day or 3 to figure out how to get into an exchange and actually sell them and get rid of them. Before you know it, you just lost 40% of your profit or all of your profit, and you're sitting in a big hole and you don't know how to get rid of it. a lot of people think, well, I can just switch it to a different cryptocurrency and get out of Bitcoin. Well, they all kind of move together. You can overlay a lot of those cryptocurrencies, and when the big one falls, they pretty much all fall. It's like the stock market. They kind of move together. They're joined at the hip. So, I think a lot of people are going to have some huge gains, and they're going to start buying stuff thinking they're rich. And then when things start to roll over, they're going to realize, I don't know how to get rid of it. How do I sell it? How do I take this profit? And the money's going to vaporize before they can liquidate it and get it out. And it's just going to create a massive crash in the market.
Chris, I hope you and your family have a great holiday season.
Hey, thanks, Jim. I hope you do as well.
My guest has been Chris Vermeulen, his website, thegoldandoilguy.com. You're listening to HowStreet.com Radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at HowStreet. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Happy holidays.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.